Welcome back to another episode of the Engage podcast. Today, we're going to be sitting down with retirement and insurance to talk about the market-based cash balance plan, GVUL, and ALPA insurance options. We have Scott Bowles and Tampa Bay John with us in the studio today. Welcome in, guys.
Glad to be here again.
Likewise.
So let's kick this off with the market-based cash balance plan. How is it going?
It's going well, I would say.
Yeah, we have almost $350 million in the account and 14 months of deferrals. Quite well. Surprised even some of our Delta counterparts. Generally, once you hit $100 million, you get some kind of customization out there. So we hit that in the first 3 months. Of course, most of the deferrals happen in the last part of the year.
Okay. I opted in for the market-based cash balance plan. And when I pull up Fidelity, I can see it's separate from my 401k, but I can't see how it's performing like I can see with my 401k. Is there a way, do I have to go on a website or is there a way to see that?
Current format that Fidelity displays the information on the market-based cash balance plan leaves a lot of room for improvement in our estimation. So we have been working with our Delta counterparts and trying to advocate for better information and more than simply the last 3 months rate of returns, things like year-to-date performance, inception-to-date performance, and those types of things. So it looks like we should have some noticeable improvements to the display available and what you'll see and all the information provided in the near future. No promises as to a completion date, but that is something that the company's heard us on, and we'll talk more on a few other points that have lent them to believe us that it would be better if the pilots knew what the plan was doing as opposed to not knowing.
Since we can't see that, how has the plan been doing?
Since inception, as of December 31st, it's been up a little over 15%, which is a lot more than what we anticipated. Now, everybody's individual rate of return is different because if you only invested, say, in the last 3 months of last year, those 3 months are actually negative. That's unfortunate, but it really depends on when and where you invested. And currently, the only way to know all of that data is if you had the statements and printed them off over the last 14 months, because you can only currently see the last 3 months, as Scott mentioned. And that makes it a little difficult to calculate your personal rate of return.
You are able to request the additional statement information from Fidelity. So if someone did want to go back and do the math to see exactly what they had put in historically and what the performance had been, you can ask for that information. Or as a tip, until there is some resolution with the current displays, you can also just make it a habit of downloading the statement each month. And that way you'd have those statements saved, since right now Fidelity is only showing 3 months worth of historical information.
Correct me if I'm wrong, because I'm one of the pilots that probably only put into the market-based cash balance plan in the last 3 months of the year, maybe 4 months, who knows. You can't actually go negative in it, right? Isn't what goes in has to be at least the threshold?
So what you're referring to is known as the preservation of capital, and not that matters to the average line pilot, but that is essentially guaranteeing a zero rate of return. However, that would only be realized if and when you ultimately retire. So at the point at which you retire and withdraw your proceeds from the plan, you can receive no less than the totality of your investments over the years. So no guaranteed rate of return other than a 0% rate of return. But you're right, you would not be negative, but you just wouldn't see that until you actually retire and separate from service.
So in the next however many years until I retire, that's going to probably rebound, knowing the history.
Odds are in your favor that there will be some better rates of return in the coming months, years, and decades.
Okay. But as of right now, even if I retired tomorrow, I would at least have that.
Correct.
That principal amount.
And to date, Delta has not paid out a negative return yet for retirement. Even really, there's been 14 months of returns and 4 have been negative. The other have been positive. Like I said, it's over 15%. If you invested all your money on day one, you would be 15% up.
Anything to add, that we may have missed about the market-based cash balance plan? Any updates?
If you were 59 and a half, those in-service distributions, if you requested one, should be processing this week. We've gotten word on that.
Today is the 19th, and we actually got word today that the first in-service distribution was actually fully completed and the assets were transferred into their 401k and credited as of today. So there's been a lot of consternation amongst those folks that requested an in-service distribution. And for those that don't know what that is, simply at 59 and a half years old and older, you can request a once per year roll of some or all of your market-based cash balance plan into either your 401k or an IRA. And so if someone did request that, since this was really the first year that there were any assets to move, it proved to be less than a streamlined process. And so we've had a lot of gnashing of teeth and consternation getting here. But as of today, we heard that the money had actually reached the accounts. So that's only a single source. So we're hoping to hear more positive reports in the next couple of days.
All right. And probably a few takeaways to communicate back to Fidelity about how they can possibly make this easier for all of us.
Correct.
One thing to note, though, if you do call Fidelity, the service line, tell them you're talking about your pension, even though it doesn't behave like a traditional pension. That is what it is under the pension space. That gets you to the right person a lot faster.
Correct. If you start with a 401k question, you'll get a 401k team that will answer you, and they are likely not specialists in the market-based cash balance plan, and it will prove to be a much more challenging phone call.
Yeah, so even when you look on the app, I have mine up right now, it is under a pension. So if you forget that, just look on your app. Delta Airlines market-based cash balance plan is under pensions, and it is considered a pension.
One other thing to note, if you're trying to find the market-based cash balance plan, it shows up on fidelity.com. It shows up on the net benefits site if you're accessing it by a computer. If you're into the app space, the Fidelity app does not show a market-based cash balance plan balance, but the net benefits app does.
You can get to net benefits from the Fidelity app, but it's just something to be aware of. It's a double login to get there.
Let's move on to the GVUL, Group Variable Universal Life Insurance. So I'll be honest, I signed up for it. I did that extra paperwork, and I have no idea what to do with it.
So the GVUL, Group Variable Universal Life Insurance Policy, is something that hopefully every Delta pilot will sign up for, as there really are no negatives. We've had some discussions on them before, but the basic numbers were in the fall of 23 when the first open enrollment occurred, where that was an option to select the GVUL. Had we all selected the program, we would have collectively saved about $30 million in imputed income taxes in 2024. Unfortunately, only about 7,400 of us signed up, so a little less than half for last year. And in this most recent open enrollment, in spite of a somewhat vigorous communication campaign, only an additional 400 or so have signed up for the plan. So we're still under half, and you have the same death benefit, same level of coverage, less cost. So just a little bit of R&I asking everyone to give consideration. It's just a way to save money. And then at the end of your career, there is something known as portability on the GVUL plan, as opposed to convertibility with the current term insurance. Sounds a little bit like insurance speak, but the difference is that you could make a decision to port or carry the GVUL insurance into retirement if that made financial sense for you, and it would be much less expensive than the current term insurance offering.
Okay, because this is life insurance, not term insurance.
Correct. Both technically are life insurance. One is just a term policy as opposed to a more permanent policy or whole lifestyle policy.
Now, the GVUL, it is expensive that first 5 years in retirement. Currently, it's about $10,000 a year. The next 5 years after that, so from 70 to 75 or 74, it's about $12,000. So it's expensive, but late in your career, if you had a bad health diagnosis, you might want to keep that insurance for you and your family at that point. It would be well worth the money because if you had a bad diagnosis, you might not be able to get any other insurance. And this gives you that option late in life.
So it's going to depend pilot to pilot whether they choose to take this into retirement, depending on everyone's specific health.
Correct.
situations.
We do have a contractual provision within the retirement. So when you first retire, if you don't do anything, your insurance will automatically step down to $250,000. And then each year thereafter, it'll decrease by $50,000 until ultimately you reach a $10,000 policy that Delta will keep on you until you pass.
Before we move on from GVUL, is there anything else we would like to discuss about it?
Just to know that the GVUL insurance also has an investment component that is not required, meaning it is fully optional. You can select the life insurance coverage without choosing to invest. Completely up to you. It's a great conversation to have with your financial planner as to whether you would want to consider investing in the GVUL. And that's something we're happy to talk to someone if they want to reach out to the R&I team in more detail about those investment options, but something just to be aware of.
There's some tax plays if you select the additional investment, but you got to be aware that there's a front end load of 2.25% that may or may not fit in with your financial goals.
Okay, so question though. You guys often will say you don't give financial advice and to find a financial advisor to help out. If I don't have a financial advisor already, how do I go about finding one?
Great question. So we have a couple of options as Delta pilots and as ALPA members. As an ALPA member, you have options through Schwab. You can call the Schwab Executive Services Group, and they will provide a significant amount of complimentary financial planning. They're not trying to sell you anything. I think ultimately the play is that they're hoping you like what they have to say, and ultimately you'll bring some assets under management with them. But again, that's completely up to you. So that's an option on the ALPA side. On the company side, we have the relationship with Fidelity, and you can also get some fairly significant financial advice for free from Fidelity. And same thing, they're hoping that you'll choose to keep your assets with them and perhaps even engage in some additional services down the road.
Let's say I go to Fidelity and I talk to Joe, and I have a few conversations with Joe, but I'm not super comfortable with Joe. Can I request a different person? Can I kind of shop within Fidelity until I find someone that I'm comfortable with?
Absolutely. And typically when you reach out to one of the bigger firms, they will try and match you up with someone in your geographic area so that if you would like to have that personal relationship, that's an option. So you can actually go in and meet them and press the flesh and have a conversation in person as opposed to doing the COVID thing with Teams and Zoom and conference calls and all of that.
Yeah, it's always nice to look someone in the eyes that's going to be handling hundreds and thousands of dollars.
Or more.
Or more. Hopefully more. Okay, so moving on from GVUL, we have ALPA insurance options. And I know when I fly with new FOs, anyone that's pretty much been here for just a couple years, they don't realize that these things are available to us. I don't think that I signed up for them in my first few years until I started doing a little bit of ALPA work and talked to you guys and realized that it's actually not very expensive and it can help out a lot if you get into a pickle. So can you go over a few of those with us?
Absolutely. So the two plans that you're referring to is referred to as the ALPA accident and critical illness insurance. And we're big advocates. Those of us on the R&I team, almost every one of us has had an opportunity to cash in on these policies. And essentially they started out as almost a small insurance policy for those high deductible healthcare plans so that if you did have a sudden high cost medical event, you would have some coverage for those thousands of dollars that you would be out. What we've found is, especially if you are active or your spouse is active or absolutely if your kids are active or they're just kids, the likelihood of you utilizing these insurance coverage plans are pretty high.
So with the accident insurance, we signed up for it. We've used it a few times because my husband, as much as I'm the clumsy one, my husband seems to be using it more. He had a time when he needed an x-ray on his hand after a ski incident, we'll call it. And there was another time when he slipped off the back of a boat, fell into the water and stubbed his toe on a rock. We were in Australia, so we ended up in the ER. And I put in for those and they paid. Can you explain to me how they pay?
Sure. On the accident side, there's a set reimbursement schedule. So for example, if you went to the emergency room, as in your case, and maybe you had an x-ray or it was more serious and you had like an MRI or a CAT scan, each of those medical instances has a set reimbursement rate. It might be 500, 200, 100, whatever it is. And so once you receive your final insurance bill, you simply submit your explanation of benefits to Voya, which is the company that administers the ALPA plans. And they will look through your itemized list and see what all you incurred and hopefully reimburse you correctly. They can send you a check or they can actually make an ACH transfer right into your bank account. So it's pretty easy to actually make the claim. First time's always harder, but especially if you have kids. And little sales point, if you have kids that are in an organized sport and they happen to have an incident or an accident, there's an added bonus for organized sports as well.
Sounds good. And something to note, the amount that you pay over the year as a younger person with a family, the amount that I'm going to pay out of pocket is actually reimbursed to me because I do wellness checks.
Correct.
Yeah, the wellness check is a great tool. It's $100 per policy. So the accident and the critical illness are two different policies. So the member would get $200 if they had both policies. The spouse would also get $200. The kid gets $50 for each policy, so $100 up to 4 kids. So you could potentially have an $800 wellness benefit.
But one point on the accident and critical illness to be aware of is when we talk about the well checks, it's a really easy bar to clear. So as a pilot, your medical in and of itself would satisfy your well check. For a spouse or kids, any touch point with the medical community, be it a chiropractor, a dentist, an orthodontist, or your family practice doc, those all cover the requirements for a well check. So it's really easy to earn those wellness benefits. The hard part on it is just remembering to submit for them.
So maybe set a reminder in your calendar. And I can attest to it. It's very easy. You don't have to have anything signed. You just put in the name of the doctor, and then I usually use the dentist because that's what my kids go to for sure every 6 months, other than their yearly checkups and all that. But the dentist counts, and it's super easy. Submit it, and you get your money. So as long as our pilots do the wellness benefit, they could actually be making money off of signing up for critical illness and accident insurance.
Correct. So if you have a family and you're under 50 and you complete the wellness benefits, it is more than free. It's a pretty good deal.
So those are two great options for our pilots. We already have disability insurance through Delta, and then we also have DPMA, but we can also get disability insurance through ALPA. Why do I need extra disability insurance if I have those two?
Great question. So the ALPA national insurance policies, there's 3 different policies you can choose from, and they're really designed to dovetail or follow the end of DPMA. So they would typically kick in about 12 months after your event, whatever that might be. So a great question to ask yourself is, where's my cash flow going to come from? And, how long have I been around? How much have I saved? What's my expense look like on a monthly basis, from mortgages to food to kids, etc. And if you don't think your disability pay long-term, which shameless plug, I would say we have the best disability plan in the business. If that disability long-term is not going to cover your monthly, you might want to give some consideration to another policy until you do have enough resources to cover whatever your expenses may be, even while you're disabled.
So we're really looking at these in the case where you're out for more than 12 months.
Correct. Most of the, all of the ALPA policies will not begin to pay out until you've been offline for 12 or more months.
Which is coincidentally about when DPMA ends. So it kind of dovetails right there. If you did not have those insurances after your DPMA benefit runs out, you're down to that 50% final average earnings.
Taxable. Something good to keep in mind. All right, any other ALPA insurances that you guys would like to talk about today?
ALPA does have a life insurance policy also that are 10-year, 20-year terms. So you'd pay the same amount for 10 years, or if you had the 20-year, that one may work out. I would check that versus the optional life insurance policy that Delta has, or for that matter, on the open market for any optional life insurance above our contractual amount. If you're in need of more life insurance, ALPA does have policies.
Right. I think it's important to know that the optional life insurance through Delta, while very cost competitive, does adjust annually as you age. So over the course of, for example, a 20-year term, you may do better having a fixed cost through the ALPA national policy or an outside vendor period.
And another ALPA policy that really doesn't affect the active pilots. ALPA has a dental policy. Some of our retirees tell us that the ALPA dental policy is a good way to get dental coverage because we hear that that's lacking in Medicare. And so that might be something to look at. We're not selling anything, but
something good to take a peek at.
Right. And what we find typically on the ALPA loss of license or disability type policies is if you're under 50, they're not that expensive. And we sort of refer to that as the squeal point. At 50 and above, they charge you in 5-year age bands. It becomes noticeably more expensive. So we see a lot of folks dropping off as they get into their 50s. But of course, the reason it becomes more expensive when you get into your 50s is because the likelihood of you using it is much higher. So again, take a look at your personal cash flow situation, maybe talk to a financial planner, see what they would recommend, and consider that as an option. We do have a third benefit plan that was part of our last contract that we were able to negotiate with the company and reach an agreement on. And we had made a deal with the company to finish the implementation of the market-based cash balance plan and the GVUL insurance before we started down the road of this third plan, which adds to the acronym list, but it's known as an NQDC, or a non-qualified deferred compensation plan. And we should have some more news and education starting in the coming weeks on that plan, if not sooner. But the NQDC, we're in the final vendor selection. We expect to hear from Delta in the next week or so on who the vendor will be. We've reached an agreement on most of the operating points, and the plan is for the deferred comp program to go live as part of open enrollment this fall, starting or commencing on January 1st of 2026. For a quick review of what the deferred compensation plan is, it will allow pilots to defer income and thereby defer taxes until a point in the future in which you choose to take the money. So, for example, it really is more geared for the latter half of your career, but it's not necessarily restricted to that. So even if you were, say, younger and you were trying to have some added cash flow that might, say, be ready when a child turns 18 or a wedding might be coming up or anything like that, you could gear those payments to arrive at that time in the future. So you would elect when you choose to defer, when you're going to receive. One point on the deferred compensation plan is it is a non-qualified, hence the NQ part of the DC acronym, non-qualified asset. So if there were to be a corporate bankruptcy, these are funds that could be at risk.
Something good to keep in mind for anyone who has lived through a bankruptcy at an airline.
Yeah, we don't provide financial advice, but if you're super young and you qualify for the plan, talk it over with your financial planner if it's right for you, because if you defer these assets for decades in advance, I'm not sure where we can predict the industry is going to be.
Right. There have been several black swan events I can recall over the years. Take that as a word of advice, but it is a great plan. They are very common in most higher income W-2 earning professions and some of the non-W-2 things as well. But it's a great way to structure your taxes maybe a little more efficiently than you otherwise might be able to with things just like a 401k or a market-based cash balance plan that come with a lot of rules because they're qualified assets or they carry some government insurance as opposed to a non-qualified asset, which does not.
Am I going to have the option to change the date? Let's say I put it for my daughter's 18th birthday and she's 5. Let's say in 7 years, I could really use that money. Is there a way to change the date where it comes back to me?
It's almost a yes and no question. When you make the election, that's an irrevocable choice. So if you were to say, I'm going to defer 5% of my income for next year, and I want to take that income in 3 years, you are not allowed to change that. However, when you receive the money in 3 years or 4 years from today, you would have the option to re-defer those assets. That usually comes with a 5-year minimum, and that'll be part of our education campaign is filling in the blanks on what are some of the restrictions that are available and the options that are available within these plans. But it does give you a lot of flexibility. Just know that, number one, as we said, it's non-qualified. Number two, once you make an election, that is an irrevocable choice.
For the whole year. And generally speaking, you can't get your money earlier. You can take it later, but like Scott said, it's a 5-year. When you modify that, it's 5 years later.
Okay, sounds like there's probably going to be a lot of information on the NQDC, so we'll cap it there. Everyone knows there will be information coming their way, and it sounds like there's going to be quite a bit of information and a lot of frequently asked questions.
Probably some more podcasts.
Fantastic. That's going to wrap up this episode of the Engage podcast. Scott and John, thank you so much for coming in and chit-chatting with us.
Take care.
Thanks for tuning in. Until next time, stay informed, stay engaged, and fly safe.